Good morning, everybody. It's Friday, December 29th, 5:26 a.m. Central Time. It is the last trading day of 2023. Quick heads up, we will be off on Monday and Tuesday. We'll be back with the normal podcast rotation on Wednesday. Matt Bennett, Mackenzie, good morning. Guys, let's start off with some South American weather.
Brazilian weather forecasts have shifted wetter. A widespread rain event is expected to begin on Saturday and continue through at least the first full week of January. Rainfall totals are expected to be the heaviest in some of the driest portions of Brazilian soybean country. Areas further south continue to run moisture surpluses and will be drier by comparison.
This is the wettest forecast I've seen for northern and central areas of Brazil, probably throughout the growing season to this point, Matt.
Oh, absolutely. I mean, a lot of folks have been similar to the U.S. calling for rain to show up in 2 weeks, right, or 10 days or whatever, and never really has materialized up until now. It sure looks like, you're looking at a sizable amount of rainfall, which should help, especially with the later planned beans. Really, I mean, I think it's July, August timeframe for a lot of these beans, so it's crunch time. I think several of these beans, especially the ones being harvested, aren't. They've been hurt pretty bad, but who knows how widespread it is. It's really hard to get a handle on it.
I think that's the exception. I think that's the exception and not the rule. I think these rains, if this is real, and the models have underperformed, I believe, to some degree this year. If this is real, this is bearish. I'll just say it. If you're a fund manager, you're long beans going into this 3-day weekend. Are you staying long beans going into the 3-day weekend? Looking at this?
No. Absolutely not. No,
I'm not either. Maybe that's why I'm not a fund manager.
Yeah, I see no reason to be. I mean, the thing is that we all know, if Brazil has a good crop, they don't have to have a great crop. If they have a good crop, world soybean supply, world stocks, balance sheet. I mean, it's not snug, not by any stretch of the imagination. So you throw 155 even on top of what we're looking at, and I mean, you just don't have much of a story.
Soybean market has loosely trended lower since it peaked in November. We've lost like almost $1 a bushel. It's not really trading like a weather market right now. I don't think you're not seeing that sort of volatility. I mean, we're not trading huge ranges, but it's they've taken some weather premium or risk out of this thing, I believe. Now let's shift to Argentina. They're in better shape.
So Argentina's government is proposing new economic reforms that would include a plan to increase export taxes on major grain crops. Argentina's ag sector, of course, is strongly opposing the plan, claiming it goes against the new right-wing government's promises to boost employment, production, and exports. Meanwhile, Argentine farmers have been able to make significant planting progress due to abundant rainfall. According to the Buenos Aires Grain Exchange, 79% of Argentina's soybean crop and 70% of the country's corn crop have been planted.
They're in good shape. I don't know much about the policy items. These are just proposals. This is rainfall as a percentage of normal since November 1st. And if you look at like the side-by-side versus production density, they're doing really damn good. I mean, a lot of areas have caught like more than normal in terms of rainfall, and some of your western, maybe northern areas, maybe slightly below normal, but they're in good shape. And that's why you don't hear much talk about Argentina, Matt.
No, absolutely. And I think that's part of the reason why, soybean meal especially has kind of had a tough time here lately, being able to gain any traction. And, I think if Argentina would have normal production, you're just really going to struggle to, to see some of the lofty prices that we've seen over the last few months.
Yeah, I had that chart in the podcast, I think yesterday, and it was like combined Brazil and Argentina soybean production. And even if you get Brazil down into the low 150s, even sub 150, if Argentina's 48 or better, you're still record combined for those two countries, which I'm not going to say it's like super bearish or anything, but it just speaks to how big the crops combined will be in those countries.
On Wednesday, a Panamanian cargo ship struck a Russian mine in the Black Sea. The explosion injured 2 of the ship's crew members and forced the captain to run the ship aground to prevent it from sinking. The ship was en route to a Ukrainian port on the Danube River to load grain. In an effort to offset Russia's threat to the Black Sea, Ukraine has attacked Russian forces in Crimea on several occasions. Just on Tuesday, Ukraine carried out an airstrike in Crimea that destroyed a large Russian warship.
Wheat prices perked up again, like right as this happened yesterday. And we had the earlier headline this week that helped to rally wheat prices. That being said, we haven't really covered any new ground in the wheat market, and we've reacted to it slightly, but it's not the end all be all that it used to be. This was a grain ship, though. It was an empty grain ship, I think, but it was a grain ship.
No, absolutely. I think previously, a year ago, for instance, and even farther back, something like this, if it would have happened, you'd have seen wheat up though probably 30 to 50 cents,
Oh yeah.
and now it's 6 or 8 cents. I mean, it's better than nothing, but I think people understand the grain flow out of the Black Sea region is going to happen. It could be quite cumbersome, and you may have some significant roadblocks, but it's still going to happen.
We've still got a drought here in the United States.
So temperatures were well above normal throughout the Corn Belt this past week. Above normal precipitation improved drought conditions in western Missouri, northwest Iowa, and western Minnesota. A lack of moisture in southern Illinois caused drought conditions to worsen. Precipitation in southern Illinois is about 25% of normal for the month. Heavy precipitation across the high plains caused drought conditions to improve in eastern Nebraska and eastern Kansas. So when we look at the percentage of U.S. areas experiencing drought, corn country 44%, soybeans 48%, winter wheat 30%, spring wheat 25%, and cattle country 34%.
Matt, you've told me on several occasions that farmers are concerned about the drought as it relates to planting next year's crops, as it relates to winter wheat, as it relates to marketing. I don't want to make any sales because it's so dry. Are you still hearing those same things?
Yes, I mean, we're still hearing them. The other thing, there's a prominent climatologist in Iowa, that says, I believe it's like an 89-year drought for 2024. And I know that sounds like, what the heck? How do you come up with that? But regardless, he's, very closely followed. And whenever you're sitting there and you're 10 inches behind on precipitation, it makes you a little bit cautious is to get super excited about making sales for no old crop, new crop, anything. But, at the same time, golly, there's in my opinion, a lot of reasons why you would still want to, cover yourself. I think the drought situation is concerning for me, given the fact that you're coming out of an El Nino. And I do believe, after talking with Eric Snodgrass and a couple of the people that I talk to regularly about weather, sometimes when you're transitioning out of a El Nino or La Nina, I mean, it's a little bit dicey as to what you're going to encounter. So you certainly don't want to go into something like that with no subsoil moisture. So I think the lack of reserves is very concerning to a lot of folks throughout the Midwest.
To revisit 2023 and how the corn market, as an example, acted, drought didn't kill us necessarily in terms of production. In some areas it did, but we just had some really timely rains during the month of July, and selling during the drought essentially was like your best opportunity, so it's I don't know if this changes the way people should market grain and that we can produce a big crop while we have a drought. Essentially, it's just that the rains were so timely, I guess.
I think that what concerns folks is that, yes, you had timely rains last year. What if you don't get them this year?
Different
I
story.
know how you feel because I was sitting here in, like, for instance, in 2012, I was farming, and I mean, it's one of those deals where you think it's gonna break, it's gonna break sooner or later, and it doesn't
Yeah.
break, and you end up with 200 plus type APH ground, and you're raising 60 bushel corn. And so obviously that's just a vast outlier. I think that 2024, if you had 2012 weather, you're going to have a lot better corn than what you had then due to advancements in genetics, but you're still going to have a train wreck. So it's concerning. It's there's still a lot of folks in that camp of, man, I don't want to sell anything that I haven't grown yet. And I understand it. They've been bit before. And those kind of wounds, they don't heal up over the course of time. You got a scar there that continually reminds you of why, some of these folks don't want to do something ahead of time.
Yeah, if those 2-3 big rain events didn't hit in July, it'd be totally different story. We'd be talking about
Completely.
totally different things right now.
U.S. ethanol production increased last week. Weekly output of 1.1 million barrels increased 3.4% on the week and 7.6% versus the same week last year. Ethanol stocks were pegged at 23.5 million barrels. The print was up 2.7% compared to the previous week, but down 2.3% compared to the same week last year. Implied gasoline demand was up 4.7% compared to the previous week and 5.2% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 4.8% versus the same period last year.
That's an excellent ethanol production number. I believe that's the second best ever on record for any week. Margins have declined because ethanol prices have declined, largely just along with the broader energy complex. You've seen softer ethanol. So margins are still like break even-ish to maybe slightly positive, depending on the plant and location. It's highly variable, but it's still good. They're going to still run with break even to slightly positive margins, right?
No, I agree with you. And I mean, the ethanol industry, it's they plan ahead of time, and I don't think they're going to run on spot margins. So
Yeah.
most of them aren't, a few of them are, but they do have a very captive supply about to hit their scales next week. And so I've got to think that these robust numbers are going to stay strong. Now, I would say, to your point, with margins being thin, JSA, our partner with the ag market, they've heard whispers of a couple of plants maybe considering backing off just a little bit. And obviously, these people just didn't have enough coverage. But I think the vast majority of your ethanol industry has got plenty of coverage, at least for the next several weeks.
Yeah, they had a lot of time to lock up really good margins if possible. And there's just going to be a lot of corn around. I mean, there's going to be a lot of corn around, barring some big change in the export situation or whatever.
Gasoline prices are expected to decline in 2024. According to Gas Buddy, the national average price of unleaded gasoline is projected to drop to $3.38 per gallon next year, down from $3.51 this year. The current national average is $3.12 per gallon. Gas prices this summer are anticipated to hover around $4 a gallon, with the exception of prices climbing over $6 out in California. The average American household is anticipated to spend $2,407 on gasoline next year, down 2% from 2023 and 12% from 2022. Diesel prices next year are also predicted to gradually decline.
So that's a market prediction, essentially, and market predictions should always be taken lightly. I've had a lot of questions about fuel. Should I lock up my fuel, Matt?
Yeah, I mean, that's a really good question. And personally, right now, I'm kind of in a wait and see mode. It just doesn't feel to me like an environment where energies are going to take off and skyrocket. And so I think barring, obviously some sort of escalation in the Middle East, I'm not necessarily looking for that. OPEC obviously is going to try to play their hand. But personally, right now, I'm not locking any diesel fuel.
You've already had so many like geopolitical type events and crude market and gasoline prices. They've still trended lower really through all that. Like you'll get your rally and then we'll back off. You'll get your rally and then we back up. I mean, if there is risk, it's probably geopolitical risk. And if the numbers work for you, I guess lock it up. It's not a huge line item for everybody, for most people anyways, but it does matter. What did Cal do yesterday?
Cattle futures softened a bit yesterday. Feeder cattle futures closed anywhere from 90 cents lower to 227 lower. Live cattle futures ended the day 47 cents higher to 70 cents lower. Box beef was also down yesterday. Choice ended the day at 291.28. That was down 20 cents. Select ended the day at 259.24. That was down $1.08.
That was not a great day yesterday. Are you going to read too much into anything that happens in cattle just today, Matt? I mean, we got holiday trade, thinner type stuff. Does it matter at all?
Not really. I mean, last week, the cattle on feed report was not friendly. You come in here on Tuesday and you think, boy, we're going to get lambasted, and you close higher on the day. I do think that there's a lot of folks that have sold the heck out of cattle, maybe to get even in their positions. And, you've just ran out of that pent up long position, that we had previously. So for the time being, I think you're kind of in a wait and see mode. I think with placements and cattle on feed where they're at, you can't necessarily make the case that you're going to rally right away. I just don't think there's a lot of sellers down here.
Outside markets to wrap up the calendar year, guys. U.S. dollars about flat this morning. Stocks just a little bit higher. Bonds are off. Crude oil is up 31 cents in the February WTI at 72.08. Everyone have a happy new year. We'll talk to you on Wednesday next week.